Hello everyone, my name is Mark Newman. I get a lot of questions from people as we get close to 30th of June about how they can potentially reduce their taxation. And one of the common questions I get asked is, if I go out and buy some materials or stock right at 30th of June, is that going to be a tax deduction and will that reduce my tax? So what I want to do today is take you through how that works for accounting and taxation purposes, and secondly, how that also works for valuation purposes. So, how does it work for taxation? Let's say we go out and buy $5,000 right as at 30th of June. Is that a tax deduction? Well, very simply it is. We actually include it in our profit and loss under materials or purchases, and that $5,000 will be a tax deduction. But what we also have to consider is how much of that stock we have on hand as at 30th of June. So for example, of that $5,000 that we bought, if we haven't sold any of that as at 30th of June, we'll have a closing stock valuation of $5,000, and for taxation purposes, that offsets each other to nil. So therefore, going out and doing a large stock of materials purchases right on 30th of June, whilst the purchase will be a tax deduction, we have to consider closing stock, and I'll discuss valuation in a minute, which may end up not resulting in a taxation deduction for us. So very simply, what actually happens when we sell it and how does that look in accounting, just to complete the picture. Let's say we actually bought $5,000 worth of stock and we actually sell it for $10,000. That will actually leave us with a $5,000 profit and a profit and loss, because obviously closing stock will actually be nil at this situation. So how do we actually now value stock at year end, and can we do anything with valuation to help reduce our tax? Well, yes, potentially we can. Now firstly, there's two categories I want to consider. The ATO for small businesses, that's businesses that turn over less than $50 million, and also their stock has changed by less than $5,000 from last year, don't need to do a stock take. They can actually do a reasonable estimate. So therefore your plumbers, electricians, mechanics, people with relatively low or stable stock can actually just do a basic estimate, and that's going to save a lot of time calculating or going through and working out how much of each individual item we have. So therefore, as long as we're doing a reasonable estimation, that is all we need to do. So how do we actually value our stock? Well, the ATO gives us three methods we can actually do it. The first one is by actual cost. So that's actually going through and working out what each item costs, and therefore multiplying by how many we have to come up with the total. So obviously we just need to have a good cost system. So for people who are maintaining an inventory system, that's actually not going to be too hard, because they'll actually have the numbers and they'll actually have what they paid for it. So we can simply run a simple report. The next one is the market value. That is what the market will pay for it at the moment. So for example, let's say you have some stock and it's now obsolete, therefore we have to discount it to sell it. We can actually use that discounted valuation to come up with a market value for it. Often this is used for, as I said, obsolete, or alternatively if the value changes within the marketplace. And the other one is a replacement value. That is what it's actually going to cost to replace. I rarely actually see this one used in place, because most people use the cost, actually what it costs, or alternatively the market value. That is, they can no longer sell it and have to reduce it down. And that's how they come up with the stock valuations. So I hope that gives you a quick overview of, firstly, yes, you can buy stock at 30th of June, it is a tax deduction. Secondly, we need to actually consider what stock you actually have on hand as at 30th of June, because actually that will reduce the value of any purchases during the year. And they'll also give you some guides as to valuation. So obviously, if you're carrying a large level of stock, always go through it. If you've got stock that's obsolete, damaged, etc., we can just use the market value to reduce the cost of that. And that's a great way to bring down your stock valuation, but also to bring down your profit and hence taxable income at year end. If you have any questions, please do not hesitate to reach out or contact me. Thank you for listening. Mark Newman.